Hello everyone, and thank you for joining us today, and welcome to this presentation of the one chart pattern that can make you successful. Welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. And first and foremost, right off the bat, for those of you who are unfamiliar with Specialist Trading, we are an educational company. Even though we provide all of our members and students with strategies and signals and ways in which to trade virtually all the markets, we are more about teaching you how to trade the market so that you can ultimately rely on your own decision process and rely on something that you see and something that fits your trading style so that you can really feel empowered by making all the decisions on your own. Okay, just to give you a little bit of background about myself, I've been trading for 37 years. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist for Donaldson, Lufkin, and Jenrette. I traded through the crash of 1987 and the bull market that followed afterwards. I've seen and traded through just about every market imaginable, and I've traded just about every strategy and system imaginable. I left the floor in the mid-90s to manage money as well as trade my own account. And about 6 years ago, I started Specialist Trading, where all I do is teach students and I mentor all of my students on all the things that I have accumulated that I personally use in my own trading. So as I stated, we are an educational company, and you'll see in this presentation today, I'm going to give you some great tips and things in which to hopefully elevate your own trading. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this number one chart pattern in my definition. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to mention or invite everyone to join us on Twitter. Follow us on Twitter. That's our handle right there, at SPCLST. TRADG. We give and post a lot of free information daily, anything from market wisdom to actual signals that were just generated. So there's a lot of great stuff for not only stock traders, but for E-mini traders as well as Forex traders. Once again, so I invite you to follow us and join us on Twitter. Okay, so I want to start out by sharing with you my experiences. I know a lot of people find this hard to believe because they think if you were trading on the floor, if you were a floor trader, you probably had a license to steal. But that's not true. I really state this a lot in all of my presentations that I struggled tremendously my first year or so trading. I was really overcomplicating my trading, and I think, in my opinion, I was relying on too many outside sources. We didn't have trading rooms or chat rooms at the time, but we had subscriptions to a lot of technical gurus. We watched way too many events and news events and things that were supposed to happen that were supposed to tell us what to do, whether some earnings or some economic news was supposed to tell us to go long or short. Also, I was also following too many indicators and listening to just too many outside distractions. But I couldn't make a dime. I was doing all the things I had been taught that were supposed to make you successful, but they really wound up leaving me even more frustrated than I was before. I came in contact with some mentors that were actually traders on the floor themselves who had been trading for 30 or 40 years, who taught me some really tremendous but simple knowledge that was able to turn my trading around. So this is what I share with you, and my goal is to teach you. Remember, once again, not to trade for you, not to just give you signals so you can blindly take them, but to teach you how to trade with the specialist edge. This is the same edge that was taught to me, and this is what I want to teach to all of my students and members of Specialist Trading. So here's what my mentors taught me. They said, Steve, first of all, the reason why you're losing is because you don't understand what trading should be. Trading should be non-subjective, okay? Two people shouldn't come up and look at the same chart or trade the same stock and have totally different ideas about what they think it's going to do. Everyone should be clear-cut as to what it's going to be doing and coming to the same decision-making process. Secondly, they said that your trading should be consistent. Obviously, you're not going to be 100% right, and that's okay. And obviously, you're not going to get home runs all the time, and that's okay. We're not looking to hit home runs. We're just looking to have this consistency in our trading where you have 2 steps forward, 1 step back. We know that some trades are going to be losers. That's okay. We can take small, minimal losses. We're more concerned that the technique will work over time and be consistent. And lastly, they said trading should be as simple as possible. And one of the things they showed me, they said, Steve, look at our trading plans. Now, these mentors of mine have been trading for 30 or 40 years. Their trading plans had maybe 3 to 5 rules at most, okay? And they said, Steve, people that have been trading for a long time have the simplest of trading plans, and that's why they've been trading for a long time. But if you notice, the people that have been trading for 3, 5, 7, 8 years, relatively short time in the markets, have these really very difficult plans to follow. They're very complicated, a lot of logic to figure out, and trading should be simple. It shouldn't be that difficult. So it's the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world to make it simple. So that's what we try to do. We try to simplify your trading. So these are the main things that they taught me and what we teach and incorporate in all of our techniques at Specialist Trading. So here's what you're going to learn today. I'm going to start by teaching you and telling you actually the truth about formation patterns. A lot of people like to trade off of formation patterns, and I'm going to show you the truth behind them. I'm also going to share with you the truth about candlestick patterns. Candlestick patterns are extremely popular, and they can be used very well, in our opinion, but you have to use them correctly. Then I'm going to share with you the #1 chart pattern that can make you successful. And you'll see this after I share it with you. You'll see it everywhere. You'll see it in virtually every chart you look at, regardless of time frame, regardless of market you're trading. Then we're going to put it all together. We're going to see how this #1 chart pattern is incorporated in probably one of our most consistent strategies. That's strategy number 4. And then we'll share with you a short-term trend identifier. That's the PET-D, and how when you combine these two things, strategy 4 with the PET-D, how you really have these high probability areas for success, okay? So here's what you're going to learn today. Get out your pencils and paper. And one last thing before we start today's class, I love to take all of your questions, but it seems to slow down the class a lot if we stop every couple of seconds to answer a question. Many times if you simply wait, your question will be answered on the very next slide. So for that purpose, I have a lot of great, tons of information to give to you today, free, that you can start using as early as tomorrow. So let's not bog down the class. Let's wait till the last 5 or 10 minutes to ask any questions. So if you have any questions, kindly write them down, or try to memorize them, and then we'll answer them at the very end. I have a question and answer box that I have to open up in order to even see your questions, and I'm not going to open that up till the last 10 or 15 minutes, okay? So if you happen to join us late, just wait till the last 10 or 15 minutes of today's presentation. I'll answer one question, which probably everybody always asks, and is this being recorded? Yes, it is. All of our presentations are recorded, so you can request a link to this particular class. All right, so let's start out, let's begin, and let's talk about formation patterns. Let's talk about probably the granddaddy of all formation patterns, which is the head and shoulders. So many traders I know love to use this. I remember this was one of my favorite patterns when I was trading on the floor, and it simply clarifies itself with the title, head and shoulders, because it's a pattern where you have 3 tops. The first top is called the left shoulder, then you have the head, which is the higher top, and then the right shoulder, which is the lower top. So you have these 3 tops, shoulder, head, shoulder. And what usually happens, conventional wisdom teaches us that once we break this so-called neckline, we head much lower. All right, so this looks all great in theory, but when you see something like this happen, this is what usually happens. We see this scenario here. Let's say you took a class or you read the book on conventional chart patterns, and you love the head and shoulders. You've seen a lot of examples where it works. And you're looking at this generic chart and you say, hey, wait a minute, here's a head and shoulders right here. It's a kind of a variation. It's an ascending head and shoulders, but this fits it perfectly. So you decide to sell. You jump in and go short when it broke the neckline, because now you're waiting for some nice large move to the downside, and it goes right back up. Okay? So you're stopped out with a small loss. You figure, well, okay, that didn't work. Maybe I misread it. Maybe something didn't happen. So then you go back and read the chapter on head and shoulders again, and you look and you say, you know what, over time I kind of jumped the gun too early. This is the correct head and shoulders. We have the shoulder on the left, we have a higher high right here, a complex high, and then we have the next shoulder. So now we should be selling right here on this breakdown of the neckline. After all, it looks just like the example we were studying. So you go short and look what happens. Okay, see, it's not clear cut. It's too subjective. These patterns will work until they don't work, and then you give a lot of the money back. How about support and resistance? I know a lot of traders love support and resistance. I get emails on a daily basis about, Steve, where's the support here? Or should we be taking this signal because there's a lot of resistance here? Well, here's a very generic chart that explains support and resistance as whatever you're looking at goes up and then stops. That's called the so-called resistance, and then it holds by making a short-term bottom, and that's support. So obviously you want to be selling at resistance and buying at support. Selling at resistance and buying support. Okay, so we see a chart here, once again a generic chart, but where it fits that scenario perfectly. We have support, support, and we have the resistance along the way. So we figure this is perfect. This is what we've been studying. So once we get down to the support again, I'm going to buy. So we get down to that level, all right? And guess what? It doesn't hold. Well, when you think, well, maybe it's this support. This is really the true support. So I'll hold off for this support level. So you put in an order to buy here, and it doesn't hold. You see, it's too subjective. One person's support is another person's resistance. You need things to be more cut and dry. This is the way I used to trade, and this is why I couldn't get consistent in my trading, because it just doesn't work all the time. So it'll work until it stops working, and then you give everything back. And the same goes true for individual candlestick patterns. Now, I'm not going to say anything bad about candlestick patterns because we even incorporate them in a lot of our strategies at Specialist Trading. One of our most consistent Forex strategies is based off of a candlestick pattern. But here's, in our opinion, what's wrong with candlestick patterns. In fact, let's take probably the most popular, which is an engulfing, either a bullish or a bearish engulfing pattern. What happens is that when you see one of these patterns, bullish obviously means that most likely you're going to continue on the upward trend, and a bearish means it's going to be going on a lower trend. Well, if we look right here, we see a bullish engulfing pattern right here. So naturally you want to buy whatever this is, and then look what happens. It goes straight down. The reason why we feel most people do not make money or trade candlesticks properly, and there's not enough consistency, is because they're trading them out of sync with the trend. So candlesticks are great as long as you're in sync with the trend. The only problem is everyone has a different idea of what the trend is. We have our own proprietary idea of what the trend is, and candlesticks seem to work really nicely with that. But a lot of people don't. They try to use them to pick tops and bottoms, and once again, they'll work until they don't work. So, as my mentors taught me, trading should be non-subjective, it should be consistent, and as simple as possible. In all of these examples I just showed you, they were extremely subjective. One person could see one thing and say, no, it's a top, and other ones could see, no, this is support. They're not consistent. You just saw in the examples I showed you. I'm sure I could show you a lot of examples where they did work, but I could show you just as equal amount that didn't. And they're not simple. They're very difficult to figure out. They're very difficult to know exactly where the neckline is in the head and shoulders, to know exactly where support or resistance is, or to know where you should take advantage of a particular candlestick pattern. So they don't fit to any of these categories. And subsequently, this is why most traders are not consistent in their trading, because these three things are not involved. So this brings us to the one chart pattern that can make you successful. This is what my mentors taught me over 30 years ago, and now I see it everywhere. And we have strategies that are based off of this chart pattern, and they work tremendously well. I know you're going to laugh and you're going to look at this and say, this is a joke, right? This is too simple. But trust me when I tell you it's not, because what you're looking for is simply a bar, not even a pattern of numerous bars, but just one bar that closes in the top 25% of its range. If you see a bar close in the top 25% of its range, that is a strong indication to buy. It doesn't matter if this is a 5-minute bar, a monthly bar, a weekly or daily bar. Now the same holds true for a bar that closes in the bottom 25% of its range. If you see one closing there, it is an indication to sell. I know you might be saying that that's silly. I mean, in this all grand scheme of things, there's tons of bars on a daily basis that I look at in the charts. How can I just make my decision based off of one bar? Well, why is this chart pattern so successful? You may want to write this down. This is the same thing my mentors taught me, and trust me, I asked the same questions when they shared this with me. I said, Steve, when a price bar closes either at or near the top or bottom of its range, the market, the only thing you should be listening to, the market is giving you a clue as to which direction it wants to go. Remember I told you why I was losing in the beginning, and why I think most traders lose is because you're listening to outside sources or distraction or noise to tell you how to trade? Well, that's probably the main reason why. We're not listening to the most important thing, which is the market. We're hoping that other things, either trading gurus or chart patterns or indicators, are going to tell us when to buy or sell. The most important thing we should be listening to is the market itself, and that means the chart that's directly in front of you. So the market when it closes either at the top 25% of its range or the bottom 25%. The market itself, not an outside source, is giving you a tremendous clue as to which direction it wants to go. Most likely it's going to continue in that direction for the next 3 to 5 bars. What a great clue. Now I realize if you're looking at 5 tick bar charts, it's not going to be a lot of follow through. But if you're looking at daily bars, how would you like to know that the next 3 to 5 days are going to continue most likely in that direction? Let's look at older charts here just for educational purposes. Now let's look and see how we could apply this with some type of pullback strategy. So a pullback meaning that since we're in a sustained uptrend here, looking back in hindsight, every time the market sold off and had one of these dips, we wanted to find these bars that closed in the top 25% of its range because that was the market telling us that most likely the dip or the sell-off or the pullback is over. So if we just simply highlight them, look at all the places where the market was telling you the sell-off is over, I'm going to go higher. All right? These are all of these little sell-offs here, these little pullbacks that the market was giving you a clue that most likely the sell-off is over, we're going higher. This is a daily older chart of Tiffany & Company. How about in this older chart, 5-minute chart of the E-mini? Obviously, we're in a downtrend here, so we wanted to see every time we had a little bounce, every time we had a little pullback to the upside, did the market give us clues that it was going lower by closing in the bottom 25%? Well, we signaled here, and yes, it did. Look at all the times the market was telling us we're going to be headed lower. Okay? Remember, no trading guru, no indicator told us this, just the market itself. How about a weekly chart, the dollar Swiss franc, okay? Same thing applies. We have these sell-offs, and then when we had the closing in the top 25%, the sell-off was over, and we went back up. Another sell-off, a close in the top 25%, and we went back up. And you see this on and on. In fact, go ahead and do your own research. Look at the charts you're looking at right now. Look at whatever you're trading, whatever market, whatever time frame. It doesn't matter. It's a tremendous clue that the market itself gives you. And this is the only thing you should be listening to because this is the source of everything you're trading. It's the market in front of you. It's not some trading guru or some chat room. It's the markets. All right, so how do we implement this chart pattern? I know you're saying, okay, this is all fine and well, but how do I use this to trade? Am I just supposed to look at every bar that closes in the top 25% or go long or every one that closes in the bottom 25%? Well, we put together a strategy that, as I stated, is one of our most consistent strategies. I'm going to share a couple of the rules with you today. It is strategy number 4. And the beauty of this strategy is that it works in any market and in any time frame, and it incorporates this number 1 chart pattern, which I just shared with you. Let me tell you about some of the highlights of this particular strategy. It's for virtually all traders. In other words, you can be a beginner, someone who's been trading for 3 weeks, or you can be an advanced trader, someone who's been trading for 30 years. You're all going to get the same basic rules to this strategy. Now, in the course, we teach you how to trade it more advanced or more conservative, however you'd like. But everyone starts out with the same rules of this strategy, okay? It's for traders looking to catch quick momentum moves. Now, you can be in this a lot longer. Once again, we teach you how to stay in longer and trade this more advanced or more aggressively if you like, or you can take it very conservatively and just take a quick profit and get out. It's up to you. The intensity level from 1 to 3, with 1 being the most intense, meaning that you have to be glued in front of your computer 24/7, and 3 meaning that it's the most relaxed where you can enter your orders and walk away, it's a number 2 intensity level, meaning it's right in the middle. It's a very moderate strategy to trade. It uses only 1 indicator, all right? And I'll share that with you today. It's the 50-period simple moving average, all right? That's all it is. And all we want to do when we're using that indicator is if price is below, then we're going to be looking for bars that close in the bottom 25%. If price is above the 50-period simple moving average, we're looking for bars that close in the top 25%. Okay? Now, the strategy comes with roughly about 5 rules, but I just gave you 2 of the most important ones there. This can apply to any time frame, any direction, and any market. I'm going to give you a lot of current examples. But please remember, our edge here is consistency. Even though this strategy will hit home runs from time to time, it will also have small losses. So it's not just so much about trying to find a methodology or a strategy that will make you a millionaire by the end of the year. We don't really believe in that philosophy. We're more about making sure that you'll be consistent so that you'll be able to trade 20, 30, 40 years down the road. That's our goal. Our goal is not to say that you're going to be a millionaire and self-sustaining in the next 6 months. Our goal is to have you trading 20, 30, 40 years down the road, because that really is the true meaning of success. There are tons of traders that made millions of dollars and lost it all. So it doesn't really matter how much money you make if the strategy goes into a drawdown and then starts to lose everything. It's more about being able to be consistent. 2 steps forward, 1 step back, and that's what we feel our edge here is at specialist trading. All right, so let's look at some strategy number 4 examples which incorporate this number 1 chart pattern. Remember, once again, for some of you who may come in late, if you have any questions, kindly wait. We'll go to the question and answer in about 10 or 15 minutes from now, and then we'll reserve the last 15 minutes for any questions. Okay, let's start out by looking at stocks for all you stock traders out there. Here's a current chart in Apple. As we see here, the first thing is we're above the 50-period simple moving average, so this means we're only looking for long trades. This means we're only looking for bars that close in the top 25% and that meet all of the rules. Now, as we go down on this sell-off here, a lot of people were thinking, well, Apple's over, it's falling out of bed, it's going to go lower. And we see a bar here that closes in the top 25% of its range, all right? But this did not meet all of the rules of the strategy, so this is not a valid signal. And guess what? Apple went lower. But now, once again, we see another bar here that closes in the top 25% of its range. It is above the 50-period simple moving average, and it met all the qualifications, all the requirements to be a strategy number 4 buy signal. So it was generated to all of our members in the course. They either received an email that night or they saw it themselves with the software that automatically produces signals for them. And 626, we were told to go long Apple. And look what happened in the next 2 to 3 weeks, okay? This was an actual strategy number 4 signal that was generated and all of our members were privy to. How about COH, Coach, all right? First thing we look for, where is price in relation to the 50? Well, price is below, so we're only looking for sell signals, and a part of the signal means that we're looking for a bar that closes in the bottom 25% of its range. So this was just in May, just about 3 months ago, all right? Do you think there were any signals generated in this sell-off here? Well, a lot of people probably lost money trying to pick a bottom in Coach, but all of our strategy number 4 members, had they studied the strategy and they knew where the signals were, could have taken advantage of all of these signals as Coach went lower. There was a signal generated at the end of April, 2 more in June, and 1 generated just a couple of weeks ago on the 8th. How about CMG? Okay, this was in the news as of late. I have no idea what it was because we don't really follow news. Remember, we don't look at outside sources anymore. All we're looking for is where's price in relation to the 50-period simple moving average. Price is above. So this means we're only looking to go long CMG. We would never even consider going short. I realize this is an expensive stock, but perhaps some of you like to trade options. You could purchase some long calls if you like. And we look for a bar that closes in the top 25%. And here's our signal bar. On the 18th, this was just last Friday, not even a week ago, the strategy generated a buy signal to go long, and look what happened. Now, whatever the news was, whatever is happening with CMG, no one called us up in advance and told us to furnish all our members with a buy signal. The market told us it was going higher. You see what I mean by that's the only thing you should be listening to. Now, we have members that say, Steve, I've been listening to news and I've been going to chat rooms and trading rooms for so long, I just feel like I have to. I can't just let them go. If you have to listen to those things, take them with a grain of salt. In other words, instead of putting 75% of all your attention to those things, maybe give them 10%, 20%, and that's it. Because the majority of what you should be focusing on is the chart right in front of you. Once again, no one told us what was going on in CMG, but the market told us. This bar here, closing in the top 25%, while it was above the 50-period moving average, and then it met all the other rules, told us to go long CMG. That's all we knew, but that's all we needed to know. And look what happened. Stock went up roughly about 100 points. All right, how about you E-mini traders there? I know a lot of you are saying, well, Steve, I don't trade daily bars. I trade, the E-mini. I don't trade stocks. Well, let's just start out with a daily bar, the E-mini. Okay, this is going back to May, once again, the last 3 months, a current chart here. We're above the 50 period, so this means we're only looking for bars that close in the top 25% of their range. All right, those are the 2 basic rules of strategy number 4. Now, there are some other rules which we can't divulge because it wouldn't be fair to the people that have spent hundreds of dollars for this particular strategy. But do you think you could have done well this last 3 months taking all of these buy signals? These were all buy signals generated and given to our members the night before. So these were all valid buy signals that were all profitable. How about a 5-minute chart? This was on the 17th. This was just a week ago, last Thursday. All right. For all intents and purposes, we were below the 50-period simple moving average. So this was telling us that on this 5-minute chart on the 17th, we were only looking to go short the E-mini. So we look for those bars and look at all the signals that were generated. Even though this was a little bit above the 50, your entry would be below because we closed below the 50-period simple moving average. Here's another one that was closed above on the prior day but closed below, and this one was well below. These were all sell signals. You think you could have made money intraday trading the E-mini just using this strategy? And Forex traders, the same principle applies. We've just looked at daily bars. We looked at intraday bars. Now we're going to look at daily bars of the euro dollar, okay? The first part of this chart has us above the 50-period simple moving average, but then we cross below it. So for the first part, we should only be looking for long signals. For the second part, we should only be looking for short signals. And strategy number 4 caught those perfectly. 2 profitable buy signals here, and then once the market fell out of bed, we had 3 profitable sell signals. All strategy number 4 signals, all that are members of the Forex strategy number 4 course were able to catch. Now this will happen from time to time. Remember I told you that this is all about consistency. We're not going to sit here and tell you that every trade's a winner. That wouldn't be fair and it wouldn't be accurate. We have losers from time to time, small losses, but it's more about consistency than anything else. We're about 2 steps forward, 1 step back. Many times you'll see scenarios such as this. The software will produce a buy signal, such as this older chart in SNDK. It's above the 50, so you're all excited. You're like, okay, I'm going to take this signal, and then guess what? You get stopped out. It goes the exact opposite direction. So at this point, after you've become a member, you're probably saying, this doesn't work. This guy is just like all the other vendors trying to sell me stuff that doesn't work, okay? So you kind of sit and watch for a while, and then another signal is generated. Even though we were below the 50 period, we closed above in this bar in the top 25%, but you don't take it because you got really hurt on this first signal and you don't want to take another loss. You haven't been trading very well, so you just sit back and watch it, and that's the one that works. I'm sure this looks familiar to a lot of you. I'm sure this has happened to you. Maybe it happens all the time. Excuse me. How can we at least increase our odds for success so that we can only take the trades that have a higher probability of working? So how can we increase our odds for success when we trade strategy number 4? Well, we discovered it through another one of our proprietary tools. This is not a strategy. It's simply a tool or a great indicator. It's the PET-D, or the Primo Early Trend Detector. This is a great tool that we have. It's something that I learned on the floor, and it's a proprietary color bar algorithm. So before, when I was trading with this on the floor, I could only use this for daily bars. I had to actually figure it out by hand in order to come up with a calculation on a nightly basis. Now with the advent of algorithms and with programmers and with high-speed computers, we've been able to turn this into a color bar. But we say it's proprietary because we're not sharing the secret with anyone. There's too many people that want to steal a lot of the great information. So this is proprietary right now. In fact, we may be even leasing this in the near future. But let me just show you how it works. Once you get a series of green bars, this is telling you that the short-term trend is up. Okay, that's how simple it is. Now, this is an ideal scenario because all of the bars are green here, and that's perfect scenario. But we're looking for just the majority of bars. So if we just see that the majority of bars are green, we are in a short-term uptrend. Now conversely, if we see the majority of bars or a series of bars are red, well, this is telling us that we are in a short-term downtrend. Now, people could say, well, what's so powerful about that? How can we apply that with strategy number 4 or with anything we have? Okay, let's see how this can work for us. When we get a strategy number 4 buy signal, we only want to take those signals that have been colored green. In other words, the signal bar is colored green. This is the short-term trend telling us that is confirmed the signal. So if we look at that SNDK here, we had 2 signals. The first one did not work out, but the second one did. So how could we have used the PET-D to help us? Well, this is just a blank static chart. Now, we add the PET-D with the colors, and we see here that this was colored red. Remember, if you get a buy signal, we want it to be colored green. So once you saw this was colored red, and this is dynamically changing throughout the day. So you could know 5 minutes before the close if it was going to be a red or not. And you could not take the signal. Whereas on this day, 5 minutes before the close, we see that it's colored green. So this was a signal you should take. So you would have bypassed this losing trade and taken this one, and therefore increased your odds for success and consistency in your trading. Now the same thing will work if we're going short. We only want to take strategy number 4, sell signals, if they're colored red, because the red means that the short-term trend is confirming that we're going much lower, most likely. So you don't want to see a sell signal that's colored green, because the short-term trend is telling you most likely we're going higher. We want to take a sell signal that's colored red. So if we look at this Euler chart of ROST, you see here that we had a number of sell signals. Now none of them worked out in the beginning. The first 3 did not work out at all. If we add the pet D, we see the reason why they didn't work out is because they were all colored green. Remember, we want to see sell signals that are colored red. But our last sell signal, our 4th and final sell signal, was colored red. So you would have bypassed all of these losing signals and taken this one, and look what happened. So you see how the pet D, when coupled with strategy 4, really increases your odds for success. Let me show you some current examples using strategy 4, where we incorporate that number 1 chart pattern with the pet D. All right, here's the chart in Tesla. As we see here, we had 3 sell signals that were generated using our software for strategy number 4, and then we had 3 buy signals. Now, if we look back in hindsight, all of these sell signals worked out fairly well. Okay, this one worked out very nicely. And then the first buy signal, which was in the beginning of June, worked fantastic, but the last 2 buy signals really haven't worked very well. Okay, how could the pet D have helped us? Well, we simply add the color bar algorithm, and we see here that all the sell signals were colored red. That's why they worked out so well. And this buy signal was colored green. So you see how we were in sync with the pet D. But as we go to the last signals, we want these to also be colored green. And look at this signal, colored red. So you would never have taken it as well as this next one. So you see how you would have bypassed these last 2 signals in Tesla to go long and moved on and gone to something that was in sync with the signal. How about BBBY? All right, we have 4 sell signals that were generated by the software to go short. All 3 of these, the first 3 seem to work very well. This one actually worked tremendously well on this large gap down. But this last one was pretty anemic. It went down a little bit, but then had you stayed in the trade and wanted to trade more aggressively, you would have been stopped out. So how could the pet D have helped us? Remember, if we're going short, we need to see the signal bar colored red. Well, we apply the pet D, and all of these profitable trades were in sync with the pet D. The only one that wasn't was the last one, which you most likely would have been stopped out at, and that's why, because it was colored green. The pet D was giving you advanced warning that most likely the trend is going higher. How about gold? Well, this will work on ETFs as well. This is GLD, the ETF of gold. As we see here that we had 3 signals, 2 were sells, 1 was a buy. This first signal worked fantastic. This was at the end of May. Then we got another signal to go short where you would have most likely been stopped out, and with a large loss, because had you placed your stop somewhere above your last pivot or somewhere above where the signal bar was, you would have been stopped out on the opening, the gap opening to the upside, about a point or 2 higher. And then we had a last signal to the upside, which did work fairly well at the beginning of July. So let's see if we were in sync with the pet D. Well, the first signal was. It was colored red, and look how well the sell signal performed. The next signal was colored green. Remember, if we're going short, we want the signal bar to be colored red. And it didn't match, so we would have bypassed and not taken this signal altogether and saved ourselves a lot of money. But on the 3rd and last signal, just a few weeks ago, we would have taken, and we could have had a nice profit here. I want to show you 4 examples here in Twitter, TWTR, and sometimes the best trades are the trades you never take. If you were just a member of strategy number 4 and were religious about taking each and every setup and signal, you would have had 4 signals here, and suffice to say, they probably mostly would have been losses. Some of them you could have broken even off of using our advanced money management techniques, but most likely you would have at the very least broken even or had a small loss. If we were to apply the pet D, we would have seen that both these sell signals were colored green, so you would not have taken them at all. And both these buy signals were colored red, so you would not have taken them at all. So once again, sometimes the best trades are the ones you never take. So therefore, had you just taken the strategy number 4 course, you would have had a couple of losers and a couple of break-evens trading Twitter. Had you applied it with the PET D, you would not have traded Twitter at all these last couple of months and gone on to something more profitable. How about a 30-minute chart of the E-mini? This is just on the 17th. This was last Thursday on a 30-minute chart. We had two signals. At the beginning of the day, we had a buy signal, and then somewhere within the day, we had a sell signal. Now, the buy should be marked green, and the sell should be marked red. But as we see here, the buy was marked red, so it was out of sync with the buy signal. You would not have gone long, and you would have saved yourself having a loss in the E-mini. But the next signal to go short was in sync. It was marked red, and you had a nice move to the downside. See how powerful this PET D is. Remember, when I was on the floor, I could only apply it for daily bar charts, but now we have the proprietary color bar algorithm that was put together by our programmers that lets us apply it to intraday bars. Here's a 5-minute chart of the E-mini, and this was on the 21st. This was Monday. Okay, if you're an intraday trader, love to trade the E-mini, we had 3 strategy number 4 signals. Okay, 2 of them worked out, and 1 was a loss. So how could we have filtered out that loss? Well, we simply apply the PET D. And now we see that the sell signal was colored red, so this was our confirmation to go short, and you had a very nice trade here where you made about 6 or 7 points in the first half hour of the day. Then your next signal to go short was colored green, so this is not in sync with the setup bar, so you would not have taken this trade. And your last signal to go long was colored green, so that was in sync, and you had a nice couple of points to the upside. We can also apply this to the British pound on a weekly basis. We see here that we've had a number of signals using strategy number 4 on a weekly basis. Most of them have been profitable except our sell signal. All right? How could the PET D helped us on this particular signal? We apply the PET D, and remember we want the sell signals to be colored red. Well, this is colored green. So we would not have taken this, but we would have taken all of the buys because they were all in sync with the PET D. All right, so let's recap. I shared with you my opinion about the truth about formation patterns and about candlesticks. Remember, we want things that are not subjective. We want things that are consistent and especially simple. The unfortunate truth is that formation patterns as well as candlestick patterns, the way most people trade them, don't fit any of these categories. They're extremely subjective. You'll have 2 people looking at the same charting formation and come up with totally different scenarios. Same thing with candlesticks, same thing with support and resistance. Also, they're not simple and they're not consistent. So they don't fit the pattern. We're looking for things that everyone is going to come up with the same decision-making process. And that's what you get in the number 1 chart pattern. Once you see a bar close in the top 25% of its range, you're not going to sit there and say, well, that's a short sign. The market is trying to tell me to go short. No, it's not. Everyone's going to come up with the same conclusion that after you've taken this course, that's a sign that the market's telling you that most likely it's going to continue in that direction. All right? Same thing if you see it close in the bottom 25%. There's no 2 ways that people can come up with different answers. It's going to be the same no matter what you see. Okay? And then we applied it to strategy 4 and the PET D. And we see how those 2 things coupled together can really increase your odds for success. Remember, trading should be simple, it should be non-subjective, and it should be consistent. You get all of this with strategy number 4, and you get it even elevated even more by adding the PET D. All right, if I can take the last 5 minutes just to talk about the special offer we have for all the attendees today. We're giving you a special combo deal of my strategy number 4 combined with the PET D and all the things that come included here. Now, I know a lot of people are saying that, well, Steve, is this the only thing I can use the PET D for? Because I like to trade other things as well. No, the PET D is an extremely diverse tool that you can apply for other things. Let me just show you what you get along with strategy 4, what you get included with the PET D. You can use PET D for a long-term tool as well. Look at this chart here. This is a monthly chart of the S&P index going back about 20 years. And you see all the high and low swings we had in the markets. Excuse me. Wouldn't it have been nice to know in your portfolio that when we got to this top here in 2008, when the bubble burst with the housing crisis and the bank crisis, if you could have gotten out? And then when would have been good to get back in? Okay, well, we simply add the PET D. And we see how the majority of bars caught all the swing up all the way up into the 2001 crash, how you could have exited in 2001 and then gotten back into the market in 2004, and then exited early 2008 missed all the sell-off there, all of the crash, and then got back in 2009, 2010, and continued to be long. This is how you can use this not only for intraday trading or daily bars, but for long term. Another thing we've noticed in the short time we've been marketing this to our members is that it works great with the news. In fact, it will give you advance warning with things that will come out weeks later in the news. Here's a perfect example with OpenTable. Now, OpenTable was purchased by another company last month in June. And if we look here at the chart coming into that time period, someone could have said, well, I'm interested in Open. There have been a lot of rumors, but I want to wait till I hear more news or a certain indicator gives me a go signal or some earnings come out, whatever. Okay? And if had you done that, well, you would have missed the boat because then it eventually opened up roughly about 30, 40 points higher one day. So many people would have missed this. Had we added the PET D, we see here that the bar started turning green well before the stock got bought out. So actually, on the 23rd of May, just a good 3 to 4 weeks ahead, the PET D was telling you you should start looking for some buy signals, all right? And regardless of what strategy you're using, if you want to use one of yours or one of mine, but the PET D was telling you, it was actually screaming that something is going on in Open and that most likely it's to the upside. So you should start looking for purchasing as opposed to maybe shorting it or staying out in the market. And so the PET D could have helped you well in advance of the news coming out. So we're offering this along with one of our most consistent strategies, which is strategy number 4. Both of these together, okay, for this 2-for-1 attendee special. You get instant course access. You'll get this as soon as today. You'll get all the rules, all the detailed instructions, entries, exits, stops. You'll get signal alerts, the weekly video trading lessons, and this also includes both the add-ons. These are the things you download to get the automatic buy and sell arrows for strategy number 4, as well as the color bar algorithm to get all the bars to be colored either red or green whenever you'd like. Lastly, you get access to my personal email. You can contact me whenever you like. You ask me questions. Anything doesn't make sense or you're starting to learn but you want a little bit more information through me, you can contact me whenever you like. And normally, these would cost $3,000 to $4,000 if you purchase these separately. We're offering this for a lump sum of $14.95. That's it. Okay, so it originally would be roughly $3,000 or $4,000. We discounted it down to $19.95, but now for all the attendees today, we're discounting it down to $14.95. But I may have spoken too soon. When I said lump sum, it doesn't mean that you have to pay that a lump sum. We realize that some people can't come up with that all in one payment, so there are payment plans available. Contact any one of our trading consultants and they'll put together a trading plan that meets your needs. But remember, this is for a limited time only. So if you want to take advantage of these two great trading techniques and tools and tips and strategies, you want to put them all together as well as my detailed instruction, as well as the add-ons you get to having the automatic buy and sell arrows, as well as the colors turning for you. Really take advantage of this. This is a really super discounted deal, and it's only going to be going on for the next couple of days or so. So for more information, here's how to contact us. You can contact our sister site. That's Pro Trader Strategies. They market and promote all of my individual courses. And you can contact any one of their trading consultants by emailing them at trading@protraderstrategies.com or by calling the trading consultant directly at 310-598-6677. Now that link you see on the bottom is the link that takes you directly to that deal so you can lock up that discount right now. So if you want to copy that down and paste that onto your browser, you can do so. I'll leave this screen up there so you can copy this down. Or if you want to take advantage of that payment plan, simply email one of the trading consultants or call them directly at the number and they'll put together a payment plan for you. So you can start trading right away with a short, small deposit. Okay. Let me open up the question and answer box, and I want to thank you all for waiting. If you had any questions, let me see if I can try and go back and answer them in the order they were given. Primi asked, or I should say Kurt, when you say price bar, what time frame are you looking at? Daily? Kurt, it doesn't matter what price bar we're looking at. Everything I shared with you today, all of the techniques, all of the tips, all of the #1 chart pattern, everything works on whatever time frame you want it to work on. In other words, if you like to trade 5-minute charts, you see those things there. If you like to trade weekly bars, you see it there. So everything I shared with you can be worked and applied to any time frame, any market. Okay? Let's see. Paulo asks, what are the requirements for the 25% close besides being above or beneath the 50-period moving average? Well, those are, the requirements of the particular strategy. I'm sorry I can't share those with you because once again, as you see the price here included, even at that great discount we have, it wouldn't be fair to divulge all of the rules for something that people have paid much more for. So you'll learn all that in the course. Strategy number 4 only comes with roughly about 5 or 6 rules, and they're extremely simple. I just shared with you probably the most complicated of the rules so far. Everything else about stop placement, exit, entries are part of the rules, and they're extremely, extremely simple. John asks, why didn't you go long 7 to 12 bars ago on CMG? Well, remember, we want to make sure that a strategy signal is generated. Okay, and it has to meet all the rules. So we just wanted to make sure that you had a valid signal that was generated with CMG and with strategy number 4. Kathy asks, do you see anything that happened today? How do you find them? Is there some kind of scanner that you use? Well, what you can do, Kathy, remember, you can put together, I know this is something you can ask all of our trading consultants because we apply all of this, the signal bars to TradeStation, also to Metastock, to MT4, as well as NinjaTrader. And I know that they have radar screens and different scans that you can put our indicators into, and then they will come up with a nightly list for you. So that's a great way to do that as well. I know that they have that with Metastock as well. So it all depends. Once again, let me just repeat those 4 of the major charting packages, charting software packages: NinjaTrader, TradeStation, MT4, and Metastock. Those are the 4 charting software packages that you can apply all the things we shared with you today. I know a lot of people ask and have those particular ones, and if you do, you'll be able to get all the buy and sell arrows as well as the colored bars for the PET-D. Keith asks, where is the exit price on all of these trades? Once again, Keith, that wouldn't be fair to the people that paid. I know I just gave you 2 of the rules. I can't give you everything because that's not fair. Remember, once we give you this information, it's yours for life. And so it's not fair for the people that paid hundreds of dollars for me just to be giving them away the rules freely over a presentation. Geo asks, will this work on range bars? Very good question, Geo. Yes, it will. In fact, I use it on range bars. I was looking at it today on range bars. It works very well. So you can apply it to range bars, whatever type of range bars you'd like. I was looking at basically 2-point range bars on the E-mini today, and we had some really nice signals with that. Dennis asks, why did it not signal buy on Twitter where it had sell signal that was green? I'm sorry, Dennis. I'll have to go back. If you want to send us an email, I think the sell signal was green, so that's one that we oh, I see what you're saying. When we had a sell signal that was green, it's because a sell signal, this is part of the rules, can only be generated if you're below the 50 periods of moving average. So if the bar is green, we're still not going to take the trade. That's part of the rules of strategy number 4. Okay, when you combine these 2 together, we only wanted to use the PET-D as a confirmation. We're not using it as an actual trade entry. We're just using it as a confirmation. So since the sell signal was colored green, it does not mean, well, then we just do the opposite. No, it means that it's not in sync and we step aside. Okay, we can only buy if we're above the 50 period. We can only sell if we're below. Okay. Is the PET-D also dependent on the 50 period? No, the PET-D, Dave, is not. The PET-D is a private algorithm. It has nothing to do with that. The only thing with the PET-D, because as you just saw, you will get green arrows, I should say green bars below the 50. That's what the last person was asking on the Twitter example. And you will get red bars above the 50. The PET-D it's totally independent. It's an algorithm based on momentum, and it has nothing to do with the 50 periods of moving average. Okay. Let's see. Henry says, hi, Stephen. I have course 1 to, I'm sorry, I'm not sure if I understand, 7, please. Send me the add-on on the PET-D. Henry from, oh, hi, this is Henry from Sweden. He's one of our strategy number 7 courses members. He's been with us for a long time. Hello, Henry. It's good to hear from you. It's good to know we have some people from Sweden here. Yes, Henry, I'll have someone contact you from the trading consultants, or if you'd like, you can simply email them. You see one of the trading consultant emails right there, and they'll set you up with the Pet D right away, okay? Rox asks, how does it turn a green or red candlestick a different color? It's very simple. They go over that with you in the course. I use it on candlesticks. As I stated, we have this a candlestick strategy for the Forex markets. It's probably one of our best Forex strategies, and it's based off a candlestick pattern. And I use the Pet D with it as well to confirm signals when I want to. This is just a side thing. So I apply the Pet D with candlesticks, and it can be done. But we explain that. It's a little bit too difficult to do now to explain, but we tell you how to do that. So for all you people wondering if you can apply it with candlesticks, yes, it works great with candlesticks. Rock, yes, it works with trade. I use TradeStation as well, and those are the candlesticks I use, and those are the candlesticks I apply the Pet D to. So I'll tell you how to do that. Bill says, when you speak of 20% of 25% of range, are you talking about between open and close or high and low? It's a good question, Bill. We're always talking about the high range and the low range. We don't care about open or close. We're just talking about the extreme high of that bar and the extreme low of that bar. It doesn't matter if it's a 5-minute bar or a monthly bar. So if the high is 8 and the low is, let's say, 0, let's just say we go just to make it for mathematical purposes, you just want to divide that in equal 4 separate parts. And so that'll be your top 25% or your top quarter or your bottom quarter, okay? I'm wondering why you showed some charts with the Pet D but did not include the 50. That was just for example purposes, not to clutter up the chart. But those were all valid signals. And once again, once you get the software, you do not need to have it in there because strategy number 4 takes into account the 50. So strategy number 4 takes into account the 50-period simple moving average. So you don't need to have it plotted on your screen if you don't want to. It will not produce a buy signal if price is below. And it will not produce a sell signal if price is above. So therefore, you don't have to have it if you don't want to. It was just to make the charts a little bit more clear for educational purposes so that you could see what was going on. Okay. Dan asks, can you add the Pet D to my broker's platform such as E-Trades? That's a good question, probably for the Pro Trader Strategy consultants. So I would contact them. I'm not really exactly sure. Once again, I don't use that, and that's something that they could probably set you up with, but I'm not sure about how that exactly would work. But I'm pretty sure they could probably set you up. I would just contact them and ask them just a simple question. They're there to help you as well. Okay, Dan? Joe asks, how many licenses do you get? 1 or 2 put on different computers? Well, Joe, we're currently giving away 2 licenses, but that's if you sign up today, as you see there in the right-hand corner. So this is something that we don't normally do, but because you attended today and you came as part of the attendee special, we're giving away 2, but you must sign up today. Okay. Bill asks, does it work on tick charts? Yes, Bill, I was using the Pet D and strategy number 4 today as well on tick charts. I was looking at a 1500 tick bar chart on the E-mini. And today was a very erratic day going up and down, and so there weren't a lot of great signals, but that's the beauty of it. The strategy kept you out of a lot of faulty signals as well as the Pet D. So many times, as I stated in that Twitter example, the best trades are the trades you never take because you hate ending the day with a losing trade, and then you see here with the strategy 4 and the Pet D, they could have kept you out of a lot of trouble. So yes, it works on tick charts great. Roger says, is the Pet D something that has to be renewed annually? Okay, that's a good question. Once again, it's currently, as you see in the right corner of your box there, it's a one-time payment, but it will be anywhere from $14.95, solely the Pet D, not combined with anything, but $14.95 to $24.95 per year in the near future. So if you don't lock it in right now, you're going to be paying this $14.95 to $24.95 a year, and we may even increase that to go 6 months because we have hedge fund managers that now use this. We have independent traders that are using this, that have been trading for years, and this is something that works very well for them. Many people just like to know that they're on the right side. They use their own strategy, they use their own technique, but they love this tool to help them know that they're in sync with the market on the short term. So, it doesn't mean that you have to apply each and every one of our strategies. That's the only way it can work. So I would take advantage of this because you're not only getting the Pet D locked in at that $14.95, you're also getting strategy number 4, which in my opinion is worth more than the single price itself anyway. So we strongly suggest you take advantage of this great deal before we start to license this, okay? Let me just go a few more questions before we close up here. Dan asks, how much is strategy number 4 by itself? It's $6.95, okay? That's the price of strategy, which is a great price in and of itself, okay? But once again, you saw the examples of strategy 4, which I showed, where sometimes the signals don't work, where it will have these small losses. With the PET D, you're really going to cut down your losses, and you're going to have that consistency that you're looking for. Let me see here. Yes, you can use candlesticks. You can use candlesticks with the PET D. Let me see here. Henry is asking once again, Steve, please send me. I am already paid course on to Strategy 7. I want to add on for Metastock. Yes, Henry, I know there may be a language difficulty translation here, but we are with putting together something for you, Henry. Someone will contact you because you are a course member, and we will put together a price or put that together for you, okay? Brian has asked, do you find any significant seasonal variations with the success rate when combining Strategy 4 with the PET D? No, Brian, we don't. We don't really take that into account. We just take everything individually. One of the beauties of our strategies and techniques is that when you have these choppy markets or seasonal conditions, it will just keep you out anyway. So, you don't have to overanalyze and know that you're coming to a specific period or whatever. It takes into consideration, once again, what's going on in the market, and it will take into consideration everything. And so it will either generate a signal or not based on the rules. Same thing with the PET D. It will, confirm or not. And if it doesn't, most of the time it will not confirm under these kind of whipsaw or lack of volatility conditions, okay? So once again, it's already in the technique, and it's already in the PET D algorithm. So you don't have to worry about that. Remember, we try to keep things as simple as possible. We don't want to be a lot of room for discretion where someone will say, well, this seasonal tendencies happen this way, and someone will say, no, I tend to find that they happen this way. It's a little bit too much discretion there, so we don't really address that much. Henry says, thanks. Yes, Henry. Once again, Henry, someone will put together a price for you and send you an email or whatever for the PET D, okay? Steve asks, hi Steve, does it matter if the previous bar closes higher or lower before your top 75% bar plots? Hi Steve. In some instances, yes. But remember, this goes into the rules of strategy number 4, so I can't really give away all of that right now, because then someone could try to reverse engineer and figure out what strategy number 4 is. Strategy number 4 looks back about 10 bars, and so excuse me, there are different ways to find a particular setup that's valid. So I can't go into detail, but trust me, you can find out as early as the next half hour if you like, once you become a member of the course, Steve. So it's all included. And remember, you also get my devoted attention as well. I'm there with you every step of the way, answering any question you may have. Every day I answer anywhere between 5 and 10 emails. So don't worry. We're always trying to be there with you. It's an educational course. We're not just simply selling you something and then walking away. We work with you to set it up on your computer. We have people working with you to make sure that you fully see all the add-ons and know how to use it and apply it. Then once you have that, technical issues resolved, we work with you on my end by having you understand the methodology so that you really can fully understand how to trade it. So there's a lot of great information and attention to detail that goes into all of our courses, okay? All right, it's time to close now. We've been talking for about an hour, and I'm sorry, I'm just about to lose my voice due to the small cold I have, so I won't be able to speak much longer before I start to crack my voice. But I want to thank you all for attending, and I really strongly suggest that you take advantage of this great, great deal we have, because we're probably going to be licensing this in the near future, and if you don't take advantage of this and decide later on to come on board, you'll only be getting one of these two things, and it'll be at a much higher price. And you'll have to renew each and every year, possibly each and every 6 months. If you take advantage of this right now, you'll have both Strategy 4 as well as the PET D for life. It's yours for life. There's nothing you have to renew, nothing you have to upgrade, okay? So with that said, I strongly urge you to take advantage. There are payment plans. You can take advantage of that as well if you don't want to come up with the full price. Thank you so much for attending. I look forward to all of you becoming members of Specialist Trading and the Strategy for Pet D Combo. I'll see you next time. Bye-bye.